Hey, Dave Knight here. 123 day trade. Let me do a little bit of adjusting here. It's been a while since I've been on the video camera. Make sure that I'm in that little corner where I want to be. All right. Hey, I want to go over three trades from last week. I want to look at two I should have traded better, and one I actually caught because it was just a phenomenal trade. I ended up going 4 losing days out of 5 last week, which is highly unusual for me. Plus, of my trader discipline, when I came out of the funded trader, live funded trader account from the week prior to that, I disagreed with Top Step Trader about the rules, and obviously I was wrong about the rules, but I felt very strongly that I was right at the time before they told me what the rule was. So, needless to say, the rule is can't be below zero. And I wasn't below zero, but even at the end of 10 days, if your account would fall, like on day 11, if my account would fall below zero from any point forward after the 10 days in the live funded trader, I would go to back into the combine or back into a funded trader preparation. So basically, what that means is if you don't break out within your first 10 trading days, you're pretty much going out of the live account, which I disagree with pretty much with all my heart. And here, let me tell you why. The reason being is that they have what's called a max drawdown on the account. When a 30,000, for instance, a 30,000 account that I'm trading has, if you go on the combine and if you go into the funded trader preparation, you have a $1,500 max drawdown. So 30,000 at one point has 28,500 as its max drawdown. I think I was up maybe at the maximum 230, 235. So let's just roughly say that my max drawdown would come up from 28.5 to, let's just call it 300 even, let's call it 28.8. So my humble opinion, you should be able to stay, if you stay above your max drawdown and still treading water, they shouldn't take you out of the live funded account. So, um, and that has a lot to do with both times me coming out of the live funded account because of having to be above a certain amount, and unfortunately, not every trading day is a winning day. And I sit around and I tread water a lot. And when we look at Wednesday's trading, I picked up 85 ticks on the 10th of February. But that also influenced. Last week was just not my cup of tea as far as not taking trades that I should, and it influenced, and it really had a lot to do with the week prior to that, the influence that I had prior to this. And I'm not bitching at Top Step Trader. They've got the gold, they make the rules, they have the gold. You got to follow their rules. It was a misunderstanding on my part that that drove, because I wouldn't have traded. I would have been more selective, I guess, in a long story short. And I was not selective at all last week. I was pissed at the world at that point because I'd come out of the live funded account for the second time, and I was, you know, their rules are very stringent, and I think personally they're too stringent, especially for traders that are actually make money doing this, and I consider myself part of the 10% that can instead of the 90% that can't. So, and I firmly believe that by all stretch of my imagination. And I say that it's just the way it is. By the way, the contract has rolled. Well, at least we're in April now. The trades I'm going to look at are back from March of last week. I got an email from Top Step Trader that they're in April contract, so I'll have to adjust for that myself here. The first trade setup that I want to look at comes from February 9th. And when you look at this, let me get my handy dandy screen draw tool out here. Let's see if I got it going here. This arrow and this volume are equal in volume. It was 818. Try this again. 818 versus 815. Now, one of the rules that I've made now that I didn't have prior, and if you know this, I've made a video about this particular setup before. This is indecision. Indecision in the market right there. And the thing to do is to stand aside and wait for a tiebreaker. And the tiebreaker did come this day. Unfortunately, I had blown my wad and my ammo prior to the tiebreaker coming out of the market. And what you're looking for is the highest volume bar to kick higher than the bar prior to what you're trading. So like remember, we were 818 or 815. I think the volume on the blue side was 818. So like this bar here was 644, this one here is 723, this one right here is 859. Is 859 greater than 818? Yes, obviously the answer to that question is yes. So this right here is where you start looking for a trade setup. So you look here and it comes down up. It does not go lower than this low, so you're still in. It goes up here, and now you have to look. You're looking here to see if you're getting in at this point up here. Let me move the drawing tools over. So if you use the highest volume bar on equal volume, waiting basically for a tiebreaker, and the tiebreaker in this case is the highest volume bar, you can see that we had a nice downward move that would have brought you in roughly in this area right here. Get my screen draw tool out. And this should have been a winning day. Now hopefully I remember this lesson. So here's your highest volume bar kicking in, and you're getting short right in that area, right below this break line right there. And then you're following it down. That was Tuesday's trade. It should have only been one trade, and I should have waited. Now I got myself locked in before all this and ended up with 1 break even and 4 losses. So not the best. I was 0-4-1, and pretty much that was my week last week, 0-4-1. I had an 0-4-1 day on Tuesday, and I had an 0-4-1 day on, I think, another day during that week. On Monday I had 0-4-1, Tuesday 0-4-1, Wednesday 1-0. I mean, I pretty much only had one winning trade all week long, all one big winning trade. Just not a very good week for me, and I lost, like I said, I lost my trading discipline. I'm going to pause and move to the next trade I want to talk about. Before I do that, I want to bring something to. Here is what I call the skyscraper. When you have massive or blow off volume, it comes in at 108, by the way. Look here, this is the bar itself, and gives you the opportunity, if you would have been able to catch it, to run it down here between roughly right in this area right through here as it breaks down below, and catching it right this area right there, which is probably worth about 50 ticks or so towards the end of the trading day. Highest volume bar, blow off volume, blue bar volume, skyscraper, HVS sky I call it, and gives you a nice little trade right there when you're looking for it. It's one of those trades I love to see when I see, I'm pretty excited when I see one of these blow off volumes. And look, you can tell because it's all by itself, right? Everything in front of it, behind it, around it is just very, very small. So you can see that the price action shows you the top right here at 28.69 and then sells off. By the way, we had the battle of the price points yet, and we want to talk about that a little bit. 28.09, I believe, was one of my targets, and 31.16 was the other target. Both these were hit. 26.09 was hit on Thursday, I believe, and then on Friday into Monday ran all the way up through. And if you look at today, I believe the market, I don't know if the market made it up to 31.16 on the March contract. Let me double check here and bring the daily chart over. But the April contract's obviously above it. So we made it up to a high on the March contract of 31.53 on the 16th, which was Tuesday. So we made it up and through both targets. So right here we went to 26.09, and up here we went to 31.16, and now we're trading in the middle of that. And that was what I had talked about on a blog post called Battle of the Price Points. Go back and take a look at that. So let me move forward to the next trade. This would be Wednesday after the crude oil inventory is released. So here we are at Wednesday. This would be February 10th, and I ended up taking 85 ticks away from the market. Now you would look at this particular market right now, and you're looking at where I am in relation to where the market is trading, and you would think that I caught it on the long side, but you'd be wrong. Here's your blue bar volume kicking in at 2091, and this is having me look short side only. Looking at our price action movement, right, we can see that we moved up, we come back down, we go back up, but we did not come across that this line right here. Now look, this is 929, 930, and this is 1 minute's worth of data right here. Look how much volume in trade action is coming through. You would think, oh wow, that looks like about an hour's worth of data in the overnights, and this is just 1 minute worth of data. 1 minute. So I'm looking to get in, obviously, at an advantageous place for me. So obviously it wasn't right through here, but it was right in here. So here comes our entry right in this area, and if I remember right, I got short at 28.36. Let's see here. So it came down. So this was your market right through here. I looked really hard if I wanted to come in right at this area, but I noticed that, you know, hey, the market had not decidedly, was it done going up? I didn't know. So I wanted to force it to make a move. And the move itself was this right through here, and then it comes up and over finally. And then this is where your entry point is, right in this area right there. So, and then if you follow this trade out, I was able to hold on through this, and then I came out at I believe it was right at, let me think here, where did I come out? 10. I was in at 9:35 and came out at 10:22. So right in this area right here is where I came out at 27.97, and I was able to capture 85 ticks on the trade. So moving from here at 28.39, wait a minute, I was in before 9:35. So I came in at 9:35 right in this area right here at 28. Wait a minute, I was in at 28.82. Take that back. I did catch it up here. Right through here. This is what I used. I used this line right here, and then I came in 28.82, and I looked at the crossover at this right here on Williams, and I was looking at to get in here. So I got in at 28.82, right in this area when it got down here. So I was using this line right here, and then I got in right in this area right there. And I was able to carry that trade down and through this. It retraced back up to 28.35, 28.40, and I was in here at break even. So I was sitting here thinking that I might, I think I locked in at least 10, 20 ticks at this point, and then I was able to right here is where I looked at it, 10.01 again. And I came out at 10.22. So I watched this crossover of the 200 bar MA, and I looked at this. So I barely got knocked out, but it goes back down, and then it comes right back up again. So I felt like I traded okay on this one. I could have maybe done a little bit better and caught a little bit a little bit more, and then been able to come out roughly in this area right here. So I could have maybe pulled in another 27.81 where I was at 27.97. So another $150, $200 in here of missed opportunity perhaps, but I felt like I traded that as about as good as I could, especially the day, the week that I had last week. Last trade I want to talk about real quick. By the way, here's another high volume spike bar, right, at 10:55 a.m. And this would have been, you would have had your entry here, and then you'd have taken a loss on this trade. So it didn't work out this time. So not every high volume spike or blow off volume works out. 20 tick stop loss here. Let's say you would have got in at, let's just say 95, 05.15, so 20 tick stop loss would have run you out of the market right here. So not every one of them works out. I'm going to February 12th. Now, February 12th is one of those days that I should have been sitting on the sidelines again, waiting for the market to show its hand. Let me find my information here. Here's February 12th. We had equal volume coming into the morning right through here. We had equal volume. I believe we had blue bar volume. So I was looking on the blue side. Early. So it warrants a 1 entry to start with. So I was okay with my opening entry, but I inadvertently clicked twice and I got short 2 when I should have only been short 1. It took me back minus 24 or minus 20, and it set off for my Friday's trading after I had a good Wednesday, a good Thursday, stay within discipline. I had a trading mistake. Instead of just closing out the trade, immediately, I let that go to minus 11 by 2. So pretty much minus 22. And then that took me out of my trading discipline. And next thing I know, I go down 48 ticks and have an 04 and 0 day on Friday. And if I would have been patient, I would have had 1 loss, then waited for the high volume bar to kick in, which was right in this area right here, I believe. It comes in later. We have this bar. It's at 692 at 835. I believe it's this bar right here, 692, makes that new high volume. Let me look back. 783, there was another volume that was higher. So then we have a red bar volume right here, which ends up being the highest volume bar at 967. So you can see that the trade was to go long through this, and then we have this bar at 931 come in, 52.51. I mean, this day just screamed that come in, out, and then Friday trading didn't really do anything. But the trade itself, if I remember right, was right in this area right here. Was to go short at this area. This ends up being highest volume bar. It was highest volume bar on the day, by the way. I don't know where this bar right here is coming in at 783. Yeah, it wasn't, I don't remember that being there. So I just remember seeing this bar right here, highest volume bar in the morning trading from 8 o'clock to 8:35. So maybe this wasn't the best trade setup either, but I did see this one. This is the one I saw, and then to go short, but I had already blown through my my 48 ticks prior to, I believe, the 8:35 mark. I mean, it was not a good day for me overall. Actually, when I look back at this week, or last week, I had ended up with 2,